Welcome to the StockOptionAssassin.com's Trade of the Week video. This is Eric. In tonight's video, we're going to look at my 3 favorite long plays heading into the Fed announcement this week. So first of all, I want to kind of just talk a little bit about the S&P real quick. Over the past 8 to 10 days, the S&P's already had a pretty good run. You can see we're up about 8% or so since we hit this bottom on the 15th. And the conditions right now are, that we're very, very overbought. We're kind of trading water just underneath that 50-day moving average, which is this light blue line. But we have cleared the 200, the 13 EMA, and our 20-day moving average. So right now, overall, this so far looks like a bullish V bottom. You're going to hear that a lot. Now, what we don't know yet is this V bottom, is this the bottom, or are we going to retest these lows? I think we're going to know more by later this week when the Fed comes out with their take on the woes in Europe and Ebola and deflationary pressures and all that stuff that's happening. So right now the market is pricing in a dovish Fed, and meaning that they're going to make it clear that they're going to keep rates low. Possibly delay the taper. I don't really think they're going to do that. If you follow that stuff, great. If not, I think they're going to stick to their plan, but they'll probably keep rates low. If they do that, then I actually think it's possible the market can break higher, and then we'll kind of see what happens when we retest these highs up here back at on the spiders about 201. So anyway, so short term we are very overbought. I'm using my DMI stochastic as one of my key overbought, oversold indicators. We had a huge run. It's starting to tick down a little bit today. So this is indicating that the buying pressure is sort of, tired. I think we consolidate here for a couple days. We could actually pull back a little bit all the way to the 200 actually, which is, about 40, 50 S&P points from about 196 down to about 191. So I think we could do that in the next couple days. Or we could just straight up trade sideways as well. So if we start to clear this, then, I'm looking to jump back on the long side here. I had been short once in this rally. I stopped myself out. And at this point, we're kind of in coin flip territory, and I think it depends on the Fed. So let's see. Let's look at my 3 favorite longs are, let's start with Microsoft. And we're going to look at these individually. Microsoft, I like a couple things. Very similar pattern to the market, except for the fact that it never got near its 200, so it was always kind of outperforming. The squeeze indicator had fired short, but that is over with now. It's starting to recover. We're back above the moving averages here. And what's most important to me is the earnings reaction. And I think you can take this idea to any stock that you like. Look at what the earnings reaction is. Microsoft's reaction was, it reported a couple days ago, they had a nice pop at the open. It faded. It looked like it almost filled the gap, but now it popped back up again, or at least maintaining its levels above the moving averages here. So I like the fact that Microsoft is, just ever so close to hitting its 52-week high here, which is about 47.5. So if the market does start to move higher, I want to be in some Microsoft calls, probably go out to December and probably go slightly in the money and look for this to make a new leg higher. So again, positive earnings reaction. Right now, we're very, very overbought. I want this DMI stochastic to sort of come down a little bit. Now, I don't know if we're going to come all the way back down to the oversold spot, but even if we can get back down to 50, then, you can start legging into this. And the key here is for it to stay above the moving averages. Now, if the Fed comes out and is very hawkish this week and the market kind of rolls over and dies, then it's, these are no longer my 3 favorite longs. These are my 3 favorite, let's wait and see where the market lands kind of thing. So anyway, I like Microsoft as one of my bullish plays. The other one, second one I'll point us to is Nike, ticker NKE. And again, positive earnings reaction, reported earnings a few weeks ago. Huge gap up. It's been consolidating ever since. didn't even fill the gap. That's how bullish this is. It's already above all the moving averages. We're already getting our DMIs already starting to come down a little bit. So yeah, maybe we pull back to the moving averages, but if it does come down to below 10 and we get an uptick, something like this, an arrow, or even if we uptick and do not cross the line, I'd be looking to buy some Nike calls as an end of the year kind of bullish play. There's a lot of talk in the market about oil going lower and all this stuff, and I do think it does benefit the consumer, and Nike is one of those consumer stocks that can really benefit from extra money being put into clothes and sports and things like that, as opposed to getting put into the gas tank. So I like Nike. We also have a squeeze that fired long. This was a couple days ago, but again, waiting for the pullback. This is indicating that the volatility is breaking higher. We hit the 52-week high today. I mean, these are the stocks that you want to be in. So again, Nike, my second favorite long right now. And the last one I'm going to look to is an ETF, which is the IBB, and which is the sort of biotech ETF. It's also trading at a 52-week high. It's been overbought for days now. It did come back and retest the 200 when the market did kind of roll over, retested the 200. But just in the past, 10 days or so, this thing is up 17%. So the way I would want to play this one is if we can get a pullback, I'd be looking to sell. Let's say we pull back the next couple days. I'd be looking to sell the 280 or maybe even 275, 270 put credit spread. I'd be looking at the November puts just because there's 25, today there's 25 days left. So once we get to like 20, 25 days left, theta is going to be on your side. So again, a pullback in the IBB, I think that we can sell a put spread. Maybe you can sell something, get some decent premium below the moving averages here. But I'm very bullish on biotechs. Playing the individual names is tough because there's a lot of earnings coming out, and this is one of those sectors where if one biotech company has poor earnings, that doesn't necessarily mean anything for the other one. It's not like transports where if FedEx had a bad earnings report, typically that's going to bleed over into UPS, and that's not really the case for biotechs. If Amgen rockets higher but Regeneron tanks lower, it's because of an earnings report, they tend to kind of hold their own ground. So I like the idea that the ETF staying bullish on that and playing it that way as opposed to picking individual names. So that way you can also take advantage of the time decay that's about happening on the November option. So hopefully that helps. If you have any questions, let us know. And you guys have a great night. We'll see you next week.